Welcome to the Daily Brief, where I'll go over the highlights in the market for Friday, October 14th, and then we'll look to see how things are shaping up for Monday, October 17th. And just as big of an update that we saw on Thursday, we saw just as, well, not quite as big, but we saw a pretty strong down day on Friday. And the market's kind of on a treadmill right now. We're back to where we were a week ago Friday when we hit that low. We're back to where we were on Wednesday. So the market isn't really deciding all that much right now, as the news of the day seems to, well, the market's just really uncertain right now. I'm a big believer that the market acts and then the news follows most of the time, where there are some news events that actually impact the market, but that's usually pretty short term in nature. But nothing has really been decided right now. So let's go back and talk about what happened. It looked like we were going to have another really strong day and possibly take Thursday's gains and then build on those. Nope. After about 20 minutes, that was all over. So we did gap higher, but then selling took prices negative. We dropped below the daily pivot also at 36.16. As the day went on, we went below the daily pivot. We drifted lower, going right into the close. So then we ended up closing at the low for the day. We were down 2.37% on above average volume. And the technicals are still negative overall. We're trying to pick out some glimmers of hope. There's some statistical and historical information that we can use that might suggest that the market will go up. But until we see that happening with price, and we see our indicators actually turning more positive, we really can't take that into account. Inflation and interest rates are still the biggest concern, but there's a lot of news coming out of the UK. They're kind of flip-flopping back and forth. No wonder we broke away from them and became our own country. But what they said that helped the market go up a little bit on Thursday, well, they kind of reversed that on Friday. So things are just pretty messy right now. So what are some comments that we can make? Since Wednesday and since last Friday, the S&P has made a round trip to nowhere after it went up to the 3,700 level. And if you watch the full length video, I actually show all the charts in that video. We went up to both the simple and exponential moving averages and hit that point and then started down right after that. Just to give you an idea, Wednesday's close was at 35.7703. Friday's close was at 35.8307. That's just a difference of 6 points, which is next to nothing. So we were pretty much unchanged going back to Wednesday and also looking back to Friday before. The 20-day moving averages are acting as resistance, as I said. And then in the UK, their prime minister, who's kind of having a difficult time right now, changed the course of things, saying that, you remember that corporate tax increase that we were going to do? And then on Thursday, we said we're not going to do. Well, I guess we're going to go ahead and do it after all. And then the UK will come out with some kind of a medium-term fiscal plan on Halloween, on October 31st. In addition to that, I guess their finance minister was fired or something. So a lot of instability right now. I mean, the Queen passes away and it's like everything just goes crazy. The Bank of England also ended their emergency liquidity support, known as quantitative easing. That stopped on Friday. So what's going to happen next? Are they going to meet over the weekend? Is there going to be a plan to continue this? Are they just going to let the markets do what markets do? We don't really know at this point. That could really have an impact on Monday's session because, as I say over and over, sometimes historically, and we've seen this with fashion, we've even seen it with technology to a degree, Europe tends to lead the US in food, things like that, where Asia tends to follow the US. And these are real broad statements. You can always find exceptions. So that's why we're keeping an eye on this. If what is happening in the UK, remember, they no longer belong to the EU, but will this spill over into the EU? And what happens there? Will that spill over into the US? So there's just a lot of real uncertainty developing right now. We still have a number of our yield curves that are inverted. Sentiment has ticked back down. We're still in extreme fear land. We never left over the last few days, but we're now a little bit more extreme. We had total retail sales that came out. They expected it to be up 0.2%. It ended up being unchanged. That's a little weaker than expected, a little bit into that maybe the economy's slowing down scenario. If you take out autos, they were up 0.1% where they expected it to be unchanged. So, yeah, so that's kind of a mixed report there. You had import prices falling on a month over month basis. If you take out fuel, they were down 0.4%. Export prices also fell 0.8% month over month. And if you take out agricultural products, they were down 0.9%. So we're seeing this tendency to a weaker economy overall. The preliminary consumer sentiment reading came out and it was at 59.8, still pretty pathetic. They expected it to be at 58.6, which is the same as what we had in September. Just to give you an idea, a year ago, it was at 71.7. Still not a great reading, but a lot better than it is right now. Business inventories were up, but less than expected. After the last time we saw this, they were up 0.5%. So we're seeing a little bit more of an increase in inventories. Our trend is still negative. The ADX is on top. The red line, excuse me, the ADX is above 20. The red line is on top and starting to get stronger. Our bias, I never switched it after Thursday. Even with the solid up day, I was really afraid that what happened on Friday was going to happen. And that's why I was really reluctant to change that, because it just seemed like all abandon was thrown to the wayside on Thursday. And it's like, don't really trust it all that much. So the bias is still negative since we had the down day, and our last number of days have been negative. So our momentum remains negative. Here on the lighter side, I found this as I was going through some articles. The Phillies, the Philadelphia Phillies, if you're into baseball, which I am, and in fact, as I record this, the Mariners might be playing their last game because they're down 0-2 against Houston. And if they lose the game tonight, which tonight for me, which is afternoon in the US, it'll be their last game of the season. But the Phillies are also in the playoffs right now. Other times when the Phillies actually went all the way and won the World Series, did that do bad things to the economy? Well, the last time they won the World Series was in 1929. That was a pretty bad year. It was the crash. 1930, the Depression. 1980, terrible economic time. 2008, the great financial crisis going on. Is that all a coincidence? Yes, it's a complete coincidence. It's like a lot of conspiracy theories out there where you have events or even multiple events that happen. People want to tie them together somehow, and they'll do anything to fill that void to try to make sense out of something that doesn't make sense. The stock market is like that too. Why do prices go up? Why do they go down? Why do they go sideways? People want to try to figure all that out. And so they'll come up with looking at the stars, the length of women's skirts, the anything, who won the Super Bowl, all kinds of stuff like that, just to try to justify what might or might not happen in the markets. But I thought you might find that a little entertaining. So what's our outlook then for Monday? We're negative, but we're right at that support level. And if you look at the longer video, I show all of those points that we're at right now. So we're still at that tipping point. We have the Empire State Manufacturing coming out on Monday. Not a big deal. It really focuses on New York, but New York is a big deal. So we want to pay attention to that. The whole list of geopolitical events, we still have Russia, Ukraine. Of course, what's going on in the UK? It looks like things were getting more under control. Now they're not. We'll see if anything develops over the weekend. Inflation and interest rates, those are the big things that the stock market is focused on currently, and the whole list that we're always looking at here. So our scenario, we kind of have to go with the down scenario. Most everything is still pointed down. Some of our oscillators are a little mixed up and we're getting mixed signals there, but everything else is still decidedly lower, but we're at support right now. And I forgot to hit the space bar on this slide. Support is holding. Shouldn't all be one word. We can't really go with the up scenario because we are pretty negative right now. We have some potentially positive things in the works, but if we don't see confirmation based on price, those setups don't really count. At least that's the way I look at them. I don't like to jump in before these things really develop and confirm that they're happening. We can't really go with sideways in that type of a scenario, even though that's really what we're doing right now, because the ADX is above 20, the red line's on top, so it is negative. So our conclusion, we are negative, but at support. Are we going to hold that support or really break to the downside? And the same thing for the intermediate term and short term. And long term, we're actually a little bit extreme on a rate of change 200 period chart, where we're actually dropping below the COVID lows in extreme negative territory. But I'm not really counting that as being overextended right now. So thank you. Have a wonderful weekend. If you are a baseball fan, enjoy the different games. Go, 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 Mariners. And I will prepare the intermarket analysis video as well as the weekly video. And I will talk to you again after Monday's session.